Hello friends, after a long time I am starting this video series again. So let's start from the last week, 21st July, Monday. What happened on Monday? So Monday you can see the Friday low is here and high is here. So PDH and PDL. I think this only PDL is important because market opened near that. So on Monday the first candle broke the CPR, broke the 20 MA also. Now here ideal setup would say that we can go short, but not today uh, because when the first candle breaks the range of the previous day, then it is good to go short or long. Like this is high and this is low. The first candle is breaking important levels along with this PDL or PDH. Now although this is broken, you don't have a good risk reward. If you go short here, you have to keep your stop loss on top of the CPR or on the central CPR. So then your risk reward will not be good because immediately there is PDL. PDL being a strong consolidation zone, it becomes a support here. So wait for the another setup. What is the another setup? And the second candle also is red, third candle is also is red, back to back red candles from here to here, from opening to here, and the CPR is not average and narrow, so it is kind of average to wide but not too wide. So in this case the trending day is low probability. So where we should, what is the first trade? First trade is reversal trade, because back to back first candles, four candles are red and then there is a proper green candle. Okay, although it did not close above the PDL, this has given the reversal sign, because you have to go long here and keep your stop loss below this pivot. Near this pivot it has reversed, so go long here, keep your stop loss below this, and twice the CPR, twice the risk reward is your target. Somewhere the CPR, the first, this will be your target. The second entry would be when this candle broke the 20 MA, but as soon as it broke the 20 MA, the risk reward is not good, because if you go long here, there is another resistance on top and there is this first candle high, that will be big resistance, so there is no long entry on this candle. That's it. This was the only trade today, and you cannot go short on this candle when it have a false breakout, because it is closing within the CPR. CPR acts as a support. So that's it. That was the only trade. So now let's go for Tuesday. Tuesday is, this is the low and this is the high of Monday. So what happened? The first candle is a red candle and this is July 22. So let us see July 22 on daily time frame. July 22 on a daily time frame. Look guys, why daily time frame is important. July 22 is here. This candle has opened exactly below the 20 EMI on daily time frame. So that was the big resistance. Okay, there are two reasons why we should go short on the first candle itself. First is, this is a proper bearish candle, go short here. Since it is not closing exactly on PDH, or it did not break the PDH in small like not a proper breakout, and there is a pivot also on top here, and main reason is this is starting from exactly the 20 EMA on daily time frame. So go short on the first candle. This is like this is called gap up rejection pattern. Like it opened gap up but it could not sustain, and it took the exact resistance from the biggest resistance on daily time frame, which is 20 EMA, this one here. So that's why we should go short. If this candle would have exactly closed on PDH, there is no short entry, because whenever the candle closes at the support of resistance, you should wait for the next candle. But since this is closed here somewhere above the PDH, you can go short. Now short here, keeping your stop loss above this pivot, and twice the stop loss is your target. Okay, there are supports on the way, but I told you, if this candle has closed exactly at the support, then you should not take the entry. But the first candle, when it gives you a pattern and it is not closing on the support or resistance, you can take the trade. So taking trade here, keeping your stop loss above this pivot, and twice the stop loss somewhere on the first on the CPR or in the central CPR. Somewhere here you can wait for your target to come. I think, yeah, it came almost near the target, but it did not reach this middle CPR. Still you would have earned profit. So that was the trade here. And then this, let us see for Wednesday what happened. Wednesday, the first candle opened is a doji candle, neutral candle, no short or long position, because it is in no man's land and it is not giving any indication. So what next? The top and bottom we have to monitor. So bottom is broken by this candle, 940 candle, but it closed within the CPR. So what happens is, CPR, unless it is broken properly, we should not take a short trade. So which trade is formed here? Look, market opened here, it is a doji candle, but second candle is bearish, third candle is bearish, fourth, fifth little consolidation, again bearish. So you can treat this as one red candle which is bearish, because within this 1, 2, 3, 4, 5, 6 candles, no candle is properly bullish, and this candle, 945 candle, is properly bullish. Now, having bullish candle is not the only criteria to go long. What is the criteria? This is a bullish pin bar, this is taking support from 20 EMA, and this is taking exactly support from the CPR. So there are two patterns. One is extreme candle reversal pattern. This all the candles you can treat as one big red candle, and second pattern is CPR reversal pattern. On the CPR it is reversing. So you can go long here, keep your stop loss below the CPR, and twice the stop loss or day's high is your target. This pivot is your target. You should get out here unless you find another entry, because this could have been your red candle breakout trade, but I will not go long here, because you see very small portion of the candle broke this level, and it's not a after consolidation, it's a back to back candle, like it's a second candle, not back to back, but still is a low probability, because if there is a consolidation and then it breaks it, that will be high probability. And second is like resistance, this PDH is a resistance very nearby, so this is a low probability for me. I'll not go long here. So that's it. Then even though this trade worked, you would have kept the stop loss below this 20 EMA. I won't go long here. Okay, this was a long opportunity. Yes, this was a long opportunity, this candle. Still low probability. Why? Because I always keep telling you guys that if the candle is breaking any important resistance, okay, and the candle is above that resistance with a equal to or less than 25% of its body, then it's not a convincing breakout. Like if this candle closes somewhere here, let us say 50% it has broken with this candle, then it's a high probability. Okay, and this second candle is come down. It's not a false breakout also, because for the false breakout, you know, this candle, actually we can treat this candle as a false breakout. Yes, this is a false breakout. Keep your enter this candle, keep your stop loss above this PDH, and then twice this stop loss is your target. Somewhere here is the target. Immediately after target, then it reverse. So if you could keep your risk reward properly, this was the false breakout, your stop loss will be above the PDH, and then twice the stop loss is your target, or this pivot is your target. Okay, this wasn't a high probability convincing false breakout, because you see this high was broken here. Okay, then this becomes a turning point, this pivot. So the turning point is on your way to your target, and this 20 EMA as well. But still it worked if you follow the proper risk reward and get out. So this was a small trade which worked, and then I see no trade when it goes again in the same direction, because already this breakout has failed. So even if it goes up, there is no, in this case what you can do is there is one more, like one trade which you can keep continuing, or you can find the small trades with a small stop loss. What was the trade? Trade was here, the first trade. It went down, and then this CPR reversal. So what you can do when this happens, CPR reversal, you keep your take the trade, keep your stop loss below the CPR and trail your stop loss. Like you ride this trade till the end of the day, so it will go up. Why? Because the first trade candle and then reversal from CPR with a proper support of 20 EMA, so it goes up till it reaches the highest point of the day. CPR reversal can happen this way because there cannot be two false breakout in the same day. So this was going down and support is taken here, then this high is also broken, then you should not see any other trade. So this you can ride the trade with the first trade. So that's it on Wednesday. Then let us see what happened on Thursday. Okay, Thursday is, look again, like similarly when I told here on Monday, I think, this was Tuesday, this was Monday. What was the first candle? Broke the CPR, broke the 20 EMA, but it did not break the low and high of previous day. So it was a low probability. But here, look, the same thing happened here also. It even did not break the CPR, but what it broke? It broke the important PDH from the first candle. It is a low probability trade, but with experience I will go short here, because what happens is if this trade doesn't work, then you have another trade which is called SAR, stop and reverse. So what I will do, I will take a short trade here, although it is not as per the pattern or rule, but with experience you will know, because it has broken the important level which is PDH. So short here, stop loss above the PDH, and I will be ready to go opposite of my view if the trade goes like this and hits my stop loss and makes a proper breakout here, then I will go long. I will go opposite my view. But as of now here I will go short because it has broken it is not as per the setup, not as per the rule, but with experience you will know this is going to work. So if you are not confident here, don't go short. Where you should go short is like, okay, the market came back. Now look, from this candle it broke the important level. Two things can happen. It can go in the same direction or it can reverse. So what you have to see? You have to see 20 EMA, how it is behaving near 20 EMA. So consider this is not a CPR, this is 20 EMA, and these are three lines which are acting as a pivot. So where is the second trade? In the same direction, check. Is it breaking the 20 EMA? No, it is reversing exactly from 20 EMA. And what our setup says, in the trending day, next entry is at 20 EMA. On this short candle, proper bearish candle, go short. Stop loss above this candle, above this swing high, or above this. Or you trail your stop loss. You ride the trade till you get a big reward. And you can get out twice the stop loss, twice the risk reward. Okay, this is the PDL here, so you can get out here, or you should get out here at this point, because this is the PDL, that was the support. Or you can trail the same unless unless any of the candle breaks your 20 EMA, so you can get out here. This has broken the 20 EMA. So that's it on Thursday. And what is on Friday? Oh, Friday was a gap down again. So Friday is a gap down. Let us see how it, this was a gap down, and now the small gap border is also formed here. This was PDL, this line, Market opened here, it went down. Okay, in the it is not closing on any of the supports, so you should go short. Go short here. This is like an open drive pattern. When it opens gap up and goes in the same direction, same thing. It opened down and it is a bearish candle, first candle. The only problem is your stop loss will be high, your risk reward is not good. So in this case, what you can do a position sizing. Trade with the less lots, or you trust on your setup and wait for the reversal. Now you go short here, keep your stop loss here with the smaller size of lots, or you wait for retracement. So mostly market will retrace. So when it comes here on this candle, 930 candle, you can go short, keep your stop loss above the day's high, and twice the stop loss is your target. Somewhere here you should get out. Now okay, this line was nothing. Okay, or the second trade is when it goes in the same direction on the 20 MA, how market behaves. But this 20 MA is not our setup, because what we want 20 MA to be lower the pivot. Here what is, it is opposite. The pivot is lower than the 20 MA. So whenever you want to take a 20 MA trade, 20 MA should be lower than the pivot, and then the candle should make a proper bearish candle for going short, or bullish candle for going long. So there was no trade here, and this is not a trade, although it broke the 20 EMA on the upside, because market always respects the first trade of the day, and the first trade of day is bearish. So as long as this high is intact, I will not go long. Okay, so even if this is broken, then if this first candle is doji candle, or market doesn't know how to react here, and then this is formed, then I would have gone long here, keeping stop loss below this. But since first candle is a proper bearish candle, it has opened gap down, so as long as this target is achieved, I will not follow any other trade unless the first trade is complete with the stop loss or target. No other trade. Okay, so there is no trade on the day. And then only for say Monday, I have marked this small gap border. Okay, then this was a virgin CPR for Friday, so this was extended for Monday, and say this is PDH and this is PDL. So let us see what market does here. Just for a little bit analysis I'll give you. Now what happened, market was consolidating below this 20 EMA. Here also market tried, tested, it came down, then again market tested, it came down. This candle broke the 20 EMA, and this is a false breakout on a daily time frame. Now if this is a clear false breakout, then this, look, it came down, it broke this support, and now very important to watch on Monday if it is gap down or it goes up. So as long as this high is broken, no long entry. Now the market is in reversal trend. I think there will be a big gap down or a small gap down, and market will continue this trend unless it reaches to the next support. Next support is around 700 to 726, and then the big support is here, which is a swing low 470. So market is in downtrend. Let us check only the shorting opportunities. Don't go long unless the important levels are broken, like this level, or yeah, this Friday's high is important now, and there is a gap border also. Okay, anything can happen in market, so don't predict anything, just wait and watch and trade what you see. Don't trade what you think or what you expect market to do. Okay guys, thank you, bye bye, take care.